Matt, thank you so much for speaking with me today. So you bought AEFS, All Essential Fire and Security, in December of 2023, I believe. But you were quite a colorful and interesting career. I mean, you were an army pilot and then went on to do an Oxford MBA. Or fill in the blanks for me. What's your background and how did you end up in ETA?
Yeah, no worries. Yeah, thanks very much for having me. Yeah, I was in the Australian Army for about 20 years. Had an amazing career. Enjoyed every moment of it, and had some amazing experiences, and got a lot of great opportunities. But towards the end of that time, I was starting to think about what might come next, and thinking about what my options were, and one of my ideas was obviously to go do more study as a way of opening up some more doors and opportunities, and that led to completing the MBA. So I did that back in 2015, 16, and it was a great way just to give me a better understanding of maybe the skills and knowledge that I might need as I transition out of the army. And I met some great people, and that led to sort of coming back to Australia and started to think about transitioning out of the army. I had an opportunity with Deloitte Consulting in Canberra back in 2017, and that was my first job outside the army. So, lots of new experiences, lots of new opportunities. It was a great first job out of the army, and that led into moving across to Babcock International, so the defence and aerospace company. I had the opportunity to work on their Qantas contract back in 2018 and 19. And so these were all great jobs to just develop my skills and experience outside the army, which was great. But after doing that sort of for 4 or 5 years, I was sort of getting itchy feet and thinking about trying to run something, a bit more of my own, something, where I could sort of bring some of those leadership skills and things that I'd learned, at Deloitte and Babcock, and bring it all together. And that started to sort of get me interested in ETA. I first came across ETA when I spoke to Jake Nicholson, maybe the beginning of 2021, and he. Just out of the blue, had a conversation. He explained what it was. At the time, I knew absolutely nothing about ETA, but he just put the idea in my head, and that started a bit of a journey at the beginning of 21. At the same time, I'd gone to business school with Pat Prendiville. We became good mates back in 15, 16, and Pat had gone off and was living in the US, doing some consulting work, and for a variety of reasons, he ended up back in Australia at a similar time, and he'd come across ETA through some of his colleagues at BCG. And we just happened to start having a conversation about what we'd sort of come across. Was it interesting? Could we look at it? And so we started to look into ETA together as a potential partnered search. We spent maybe 6 to 8 months through 2021, talking to everybody we could find in the ETA space in Australia, which, there wasn't a lot of search funds at that time. There were some investors, some very experienced investors, and some just starting to get into the ETA space. And that sort of took us through most of 2021, where we sort of Pat and I got to that point where like, yeah, maybe this is a journey that we want to jump on.
Okay, interesting. You're the first one that I've spoken to that is doing this sort of in partnership. How's that whole dynamic gone? I mean, why did you decide to roll with this with a partner in the first place? In hindsight, how's that decision sort of panned out?
I think I first started thinking about the partnership because Pat and I had come across ETA at the same time. And so we were sort of learning about the ETA opportunity together. So that was probably the first thing. The next part is, as I started to think about the various steps from raising a fund, searching for a company, operating for a number of years, I got the feeling that would be a journey sort of well spent with with somebody else, partnering with somebody else rather than sort of just going at it solo. And then probably the third reason was just looking at my skills and experience and potentially partnering with someone that had complementary skills. And right from the beginning, Pat and I realized that we'd had different careers up until that point. We had that sort of same desire, same ambitions, but we had different skills we thought would come together and work well as we sort of started the search journey.
Okay, and so how did you guys kind of break up your responsibilities? I mean, what were you doing? What was he doing? And how did that kind of complement each other?
Yeah, right at the beginning, as we got into the search, I would say we were doing most of the things together. So Pat, obviously,
Cool.
a little bit more technically minded, IT minded than I am. Pat put a massive amount of effort into setting up that tech stack with the way we used HubSpot and Airtable and the way that we set up our proprietary search. So the bulk of that effort was done by Pat. But in terms of engaging with potential sellers and business owners, we just sort of divided and conquered. We would go out either if we were talking to brokers or going out with our proprietary outreach. We'd divide up the sellers. We'd go and have those conversations, come back together and compare notes. So I would say through the search period, it was just sort of divide the list of sellers and go at it like that.
Cool. And did you guys have kind of a thesis of sort of what types of businesses you wanted to go after, or were you just casting a wide net, fairly sector agnostic? What were your requirements when you were searching?
Yeah, I think early on in the search, we went really broad in terms of industry. I think we had the same, generic sort of 10 criteria that most searchers are looking for when they begin.
Yeah.
So I don't think we were anything outside the templated search as we began. As we got through perhaps the first 12 months of the search, we started to narrow that group of industries that we'd gone quite wide on. I think we started to realize that something in the service, something in the sort of blue collar space might suit Pat and I. I came from a military background. Pat comes from an engineering background, and so we started to feel like something where we might sort of work in blue collar services. So we started to get interested in fire, the HVAC, building management services, those sorts of things. And so in the beginning of our second year, we went really deep on fire. And engaged in a number of processes, spoke to a lot of business owners in fire services. And that led us towards AFS. We first engaged with the seller around March of 2023.
Okay, cool. So you guys kind of narrowed down as you were going with the search, and then you sort of settled on fire as a sector before you had actually found the business that you ended up buying. Is that right?
Yeah, that's right. We had a group of sort of 4 interns working with us during that time, and as we sort of started to get interested in fire, then they started really honing in state by state all the different fire services companies, we got a really good understanding of the industry before we'd sort of got to the company that we ended up acquiring.
Okay. Cool. And what about that sort of sector or subsector made it attractive? I mean, were you guys kind of going into this with the intention of then rolling up further? I mean, it's quite a fragmented industry. It's to my knowledge, it's quite a attractive sort of roll up space for private equity in the US seem to be chewing through that sort of thing. Did you guys have the same sort of idea and intention kind of going into it, or what's the broader strategy here?
Yeah, as you said, over the last maybe 24 months, it seems to be super popular at the moment in the US, Australia, and I assume other parts of the world as well. There's a lot of private equity activity. There's a lot of consolidation. I think at the time when we first started looking at fire, I don't think there was the same energy in the market that there is now. So what led us to fire was really those traditional search fund type characteristics that you're looking for. So, that recurring revenue was the main thing. Revenue quality in terms of monthly testing and service and repair and project was really good. Client concentration, generally fire services work, across a really wide range of clients and customers. The fact that it's safety related, it's sort of non-discretionary, those characteristics are what got us interested. I think the other bit was, Pat and I could see us working in this industry where, working with technicians, working with, really experienced fire managers and working with clients to keep their buildings safe. So, yeah, I think it was those sort of characteristics that got us interested, and then that energy and the consolidation sort of come since we've been in it.
Okay, cool. And then with regards to the search now, did you end up finding this business through your proprietary search or did it come through a broker? And how was the whole process once you found these guys when it came to dealing with them, negotiating, and then due diligence?
Yeah, this one came across through our proprietary search, and so we had those emails going out through HubSpot, and we met with the seller, maybe March 2023. There was some negotiation between then and say May of 23 around, valuation and initial terms. So it took a number of months of conversation, meetings, negotiation before we kind of got to that LOI stage. And that was in May. And so we jumped into the due diligence and, as I'm sure you understand, for first time going through this process, it's a real learning journey, and it was for Pat and I. And that due diligence really extended from May, right through to maybe October, November, where we were working with our advisors, we were sort of negotiating the SPA. And so it was quite, it felt like a lengthy time for the deal to be running. And we probably finalized that SPA perhaps in October, I think, or November, and closed in December. So, I mean, it's probably your typical in terms of first deal, 6-7 months. It's probably about right. But I think when you're going through it, it feels like it's really dragging on.
And I think proprietary can take a bit longer than broker search as well, because they don't have a broker there on their side to kind of guide them and coach them through the whole thing. I mean, did you find that you guys were doing much of that guiding and coaching for the sellers?
Yeah, there was no advisor on the seller side, and as you said, that makes things a little bit more challenging, because I think both sides we were learning as first time acquirers, and the seller, having not gone through the process, was sort of navigating that process from a seller point of view as well. So I would describe it as a little bit clunky compared to, other processes that Pat and I have worked through since then, where we know the steps, we know how to engage with the seller. But at that time, every step just seemed to take longer than we anticipated.
Okay, cool. And so did you just mention you've been through the process since then? Have you guys made subsequent acquisitions after this one that you bolted on?
We're currently working through that now. So yeah,
Okay.
nothing,
Okay, cool.
no firm details right now, but hopefully I can update you in a few months' time.
Fantastic. Okay, cool. So then once you got into the driver's seat and you guys had bought the business, you've completed DD, you've closed and everything, what did you find? Was it what you guys expected? Were there any shocks or sort of nasties? How were the first kind of couple of weeks in the business?
Yeah, interesting. It was sort of mid-December, and we jumped straight into the office in mid-December, which is kind of a weird time to be taking over, because you're sort of rolling into what traditionally is where businesses are starting to at least quieten up as you head into that sort of festive season. But as you expect, a fire services company, is always on 24/7 on call. So it didn't stop. And I feel like, those first 3 months was just a massive learning curve. I think DD prepares you for a good understanding of all the financial and legal aspects, and it gives you an overview of the operations in terms of what are the metrics and what's the data telling you. But it's not until you're in the office working with a team, working with the technicians out in the field, that you really start to see, what's working, what's not working. but that takes a number of months. And in our situation, the seller stayed on and worked in the business for the first 3 or 4 months, and so there was just balancing him still running the business the way that he knew how to run, us trying to learn, how is the business running, and starting to think about adjustments or changes we want to make, and then what's that look like in terms of financial performance? So, but to answer your question, I just think the first 3 to 6 months was just hectic. You don't know what you don't know, and so it's just trying to learn as quickly as you can.
Yeah. And so some of my other guests have also kind of likened the having the seller still there for a number of months to kind of moving into a house where the old owners are still living inside. How did you find that experience in balancing sort of the changes that you guys wanted to implement versus, him sort of, for want of a better term, being stuck in his old ways? Did that raise any issues for you guys?
Yeah, I think it's a good analogy in terms of moving in, and the previous owners were still being there. Look, there are some positives, right? You have someone to ask questions straight away, right? If you're in the office, something happens, either a client problem or a technician problem, you've got someone to ask the question. So that's a massive positive. You've got just a huge amount of knowledge and understanding of clients, of buildings, and we were able to tap into that. And so there were relationships that the seller had for, say 15 plus years with a lot of clients. So they're all positives. I think, as you know, that as coming in as a searcher and becoming an operator, you've got to balance looking at things and starting to think about changes and optimization, but sitting on your hands a little bit and not wanting to rush and break anything. And with the seller there, I suppose that just does put the brakes on it a little bit, because you're working to learn from them and think about, how we were going to change things in the future. And I think when the seller departed the business after about 4 months, I think we were just at the beginning of feeling like, okay, now we probably have enough to move forward.
Yeah. Okay. Can you give us an indication of sort of the size of the business?
Yeah,
Obviously,
at the moment,
not getting
or
into
at the time.
but sort of when you bought it, kind of how big was the team,
Yeah.
and how did things operate? Was there any sort of management layer in there at the time, or I guess this is kind of where the benefits of having a partner come in as well, because you got split some of that workload up in the beginning operationally as well. Or
Yeah, we're just over 30 employees. There was probably 6, 7, probably 7 or 8 in terms of the office team. And then that was a small group of managers, and then supporting functions in terms of finance, reception at the time. We do some drafting work. So, small office team. And then we probably had sort of 25 technicians out on the road. So, I would describe the office or management team as your typical owner-operated sort of company, where an owner has started a small business, and then over a period of, say, 15 to 20 years, they've just slowly built the team and bring people into the office as they've needed them. And so what tends to happen is you get people doing lots of good things, but there's not a great amount of structure, and the roles and responsibilities aren't always clear. And so that was probably the way I described the business when we moved in.
Okay, cool. So you guys yourselves were, I mean, the previous owner was kind of still holding everything together himself, and everyone was reporting to him. And was he also doing sort of the rosters and which teams were sending out to which sites and all of that sort of stuff? And then is that what you took over, or what did your roles look like, you and Pat, once you guys got started?
Yeah, I think, as you said, the real positive with having a partnership, we could divide those normal business functions, whether it's human resources or finance or operations. And so Pat and I could divide that. And we were looking at sort of those high level functions across the business, and And I would say the day-to-day operational decisions in terms of scheduling of technicians and uh, completing services for clients that were still getting done by the seller. And a big thing for Pat and I was probably recruiting early on. As the business transitioned, we did have some people leave the business, not because the business transition, it just was sort of a bit of coincidence. And so we spent a lot of our time in the first 6 months really looking at recruiting options, conducting interviews and bringing people into the business. So all that sort of stuff, HR, finance, IT, vehicle management. They're probably all the things we focused on initially. We weren't really getting necessarily down to, scheduling technicians to go to client sites.
Cool. Yeah. So, I mean, obviously, huge benefits coming from the partnership and having two operators right from day one. But I suppose one of the challenges might have been in that case that, there are two salaries to support. Is that something that sort of dictated your search and told you guys that you're going to have to go a little bit bigger in order to support these two salaries? I mean, sort of the lower end of the ETA spectrum, it can even become hard to fit one salary into the EBITDA that you acquire after debt service and everything. How did the two partners and the two salaries impact your search and then obviously operating the business?
Yeah, 100%. It's a consideration right from the beginning, not just for operating, but even just through the search phase. Obviously, the fund that you raise needs to be able to support two searches, and we needed to be as efficient as we could to get through the process. That we weren't extending the demand on the fund over a longer period of time. So, and then you're 100% correct. Like the types of businesses and the size of business that we looked at was a direct link to having two searchers become two operators. So, we were constantly doing the sums on, if we were to go on this size of business and then you extend that out over sort of 5 to 7 years, what does that look like in terms of return? So it was a consideration. It led us to look at businesses generally above $2 million EBITDA, rather than in that sort of say 1 to 2 million where say solo searches may look. We needed to go a little bit bigger.
Okay, fantastic. And then getting into sort of a little bit further down the line, 12-month mark, when you guys kind of, you found your feet and you've sort of decided, okay, now we can start figuring out how we're going to grow this thing. What changes did you guys decide to implement? And how did you go about beginning to grow the business? And I mean, has it grown since you bought it?
Yeah, I think we then, in that, as we approached the 12-month mark, there was some sizable changes that we knew needed to be made, and we started to sort of build projects around those things. Probably the biggest one for us was moving locations. So the business was located in a pretty small shopfront office in the eastern suburbs of Melbourne. And it had operated there for, sort of 10 plus years. And that had suited the business at a certain size. As we moved in and we started to grow the business and we brought more people into that office team, we just were outgrowing the office. So we began the search for moving, and then, that became quite a challenge in, what part of Melbourne do we move to? What style of property are we looking for? And that led us to moving to a property in Mount Waverley in November of 24. So just on 12 months post acquisition, and you can imagine trying to move a business that's been in a property for 10 plus years, just stuff that's accumulated over that time. So that was a big challenge, and that's probably the biggest thing that we did. There was some structural changes in terms of the team, roles and responsibilities, reporting lines. We made some changes there. We increased the size of the management team. One of the other big challenges was we had to transition IT platforms, which is our industry specific. We now use Uptick. We had to transition from FireMate. We did that about 12 months ago. So that was sort of 18 months post acquisition. That was a huge job, and took a lot of sort of change management within the business. So that was the next one. The way we manage the business financially, and reporting wise, we've made some big adjustments there. And then over the last 12 months, we brought in a general manager, an industry experienced general manager to lead the team day to day and for Pat and I to work with. So, they're some of the biggest changes I think we've made over 2.5 years. And we at this point just starting to feel like we've made the big changes that we needed to make, and moving forward from here, it'll be more sort of incremental. And and to answer your question, yeah, absolutely, we've grown in terms of revenue, we've grown in terms of number of employees, we've grown in terms of our client base. All those sort of things are tracking really well. The biggest thing for us now is managing organic and inorganic growth. And as I said, working through some opportunities now in terms of M&A over the next sort of 12 months, which will have a sort of the next step change for Wattletree Capital. And at the same time, we're focusing on continuing to grow AFS. So we're really excited about what the next 12 months holds.
Awesome. So, I mean, you mentioned a lot of kind of operational changes and improvements. You didn't talk much about revenue. I mean, you said the revenue grew, but I didn't hear anything in terms of like, we implemented a new marketing system or approach, or, new salespeople. Has that kind of revenue growth just been a sort of organic function of streamlining your systems and processes, or did you guys intentionally go out there and attract new business as well?
Yeah, good question. Now, we have a really experienced sales manager at AFS, been in the fire industry for sort of 30 plus years. And so, he's a great member to have as part of our team, and he really focuses on most of our sales growth. It's an interesting part in the fire services market. Like there is a lot of work out there that needs to get done, and I think the biggest challenge for Pat and I is not necessarily sort of growing our sales capability. It's keeping up on the operational side and having the right resources to meet the demand in the market. So we actually haven't increased our sales capability, and so the revenue growth has pretty much been through the demand in the market, that's a little bit of upsell to our current clients, and it's bringing on new clients for testing and inspection work. So, that's been our focus up until this point, but not to say that we won't sort of focus on building that sales capability over the next 6 to 12 months.
But those clients, the new ones, have just come in just by way of referrals and kind of organic, sort of the demand, like you said, is just they find you on the internet and come through that way, or like how's that happening? Because one of the recurring sort of threads that I've noticed in the conversations that I've been having with a lot of you guys that are a couple of years into the journey is that once you sort of optimize the systems and the processes and streamline the operations, organic growth just comes as a byproduct, which is really interesting to hear about. I think it's a kind of a function of these more traditional old school businesses. I mean, I come from sort of an internet marketing, online advertising world where it's just constantly driving for growth, constantly looking for more sales, and it's a real effort. But in this case, it sounds like it's not really the same in these old school businesses. So long as you do the job well, then the customers will come.
I think reputation and quality of service goes a long way in these traditional type businesses. I mean, on the marketing, we've updated the website. We've done some vehicle branding. We've done some office branding just to give our brand a bit more presence, both online and physically. So we needed to do that, but reputation is a big thing in the fire services market. And if you're out there, dragging a lot of business, but you're not delivering quality services, then you're just losing the clients at the same rate that you're bringing them in. So I think we've really focused over the last 12 months to making sure that we're delivering good services, and that news spreads pretty quickly. And so what you tend to happen is current clients are looking to get more work done, and so there's a little bit of upsell there, and then referrals start to increase, and then you become a bit more successful in tender processes. So, when large clients do go out to tender, we seem to have been a bit more successful So yeah, they're the areas that have probably created the organic growth. It's not through sort of increasing the size of our sales capability. Perhaps that's just one positive of being in the fire industry. You know, you've talked to other operators and searchers. You know, there are other search fund companies out there where, you know, it's all about sales and it's all about, you know, building that engine and increasing sales. But it's just not the same for us in fire services.
Absolutely. Okay. And then now you're dabbling into more M&A stuff and growing inorganically as sort of the ETA world calls it. Have you found that those opportunities are just starting to come to you by virtue of you guys being in the industry, or are you actively going out and searching, or how's that experience been?
Yeah, we're actively going out and searching, engaging with business owners. As you said at the beginning, the energy in the mid market and large fire companies, the energy's really increased over the last 12 to 18 months, and so yeah, a lot of we seem to be seeing family offices and M&A firms sort of drift back from tech and software into more traditional type of markets, and fire services being one of them. So, yeah, we've seen a lot of small acquisitions, and a lot of investment from M&A firms, which makes it a little bit more challenging for Pat and I. Having said that, the sellers that we try and engage with are probably a little bit smaller than the mid-market M&A firms. That's one thing. The other thing is Pat and I try and offer just something different. If a seller, you know, after running the business for 25 years is looking to sell for the biggest valuation, then, you know, there's a big wide market out there and they can engage with a variety of buyers in the market. But if a seller's been operating and really wants to look after his team, really wants to look after the client base, he wants someone to come in and just build on what they have already built, then that's something that Pat and I can offer. And so we in our initial conversations with the seller, we try and highlight that, you know, that's our focus. We want to come in, we want to integrate into the established team, we want to continue to build on that legacy, you know, build on that brand, and you know, it becomes a part of our broader group. And so that's kind of our strategy over the next 5 years. You know, we're not looking to acquire and just smash them all together. We see an opportunity to operate established brands across different locations and continue to build on that.
Okay, fantastic. All right, and now sort of looking back on the last couple of years, I suppose from when your search first began, and just speaking to people that are about to embark on the same journey or, you know, already searching for businesses, what do you think some of the key mistakes you made were, and what would you have done differently looking back now that the journey is kind of complete in a sense?
In terms of the journey that Pat and I went on, I don't think we made too many errors from when we first started thinking about ETA to, you know, when we raised a fund. And that's probably the best advice that Pat and I give to searchers before they even get to the point of raising a fund is spend 6 months getting out there learning from whoever is happy to speak to you. And that's investors, and that's other searchers, operators. And if you get the opportunity to talk to business owners, it's great. But spend a significant amount of time learning from those that have sort of progress down the journey. I think that's really important. That'll help any potential searchers make the right decision, but based on, you know, information from those that have done it before. You know, I hate to see searchers sort of jump into ETA for the wrong reasons, and you've probably seen it as well, where either it's seen as a quick and easy route to, you know, earning good money, or it's an easy way to, you know, acquire a business and just sit back and watch. Those sorts of things. You don't want to get into search for the wrong reasons. But if you're excited about potentially, you know, getting in the trenches and leading and running and operating a business, and you want to learn each of the different steps along the way and commit to the hard work that's required, then, I'd highly recommend it to anybody that wants to give it a crack. But just make sure you take the time to learn about it before you make any big decisions.
And looking back on it now, do you have any thoughts on sort of self-funded search versus going down the path that you went down, which was to raise a fund right from the beginning? Obviously, the benefits are having these investors that then become mentors and provide guidance and whatnot. But in hindsight, any thoughts on that?
Both paths have their pros and cons. There's no doubt about it. I think at the time, based on what Pat and I knew, the traditional search path made sense to us. Just based on where we were in our career, like we were sort of mid-career, sort of 10 years. No, not quite that. Maybe 7 or 8 years post MBA. We both had kids and young families. What the traditional search gave us was, first of all, engage with a group of investors that really supported us from day one. It gave us an opportunity to earn a small salary as we went through the search phase. And then it gave us the opportunity to perhaps look at targets that were a little bit bigger, but we knew we could fund with the investor group that we had. So everything that we looked into, and based on our circumstances, the traditional search was the right path at that time. Having said that, we've seen some great self-funded searches, acquire great companies and under different terms and conditions that in time will be really beneficial for them. And they tend to operate smaller businesses with smaller teams, and then the growth journey is slightly different. So, if Pat or I would go through the process now, perhaps we would look at it a little bit differently. But at the time, I think we made the right decision, and I think the traditional search journey has been amazing for us.
Okay, and then a question I haven't asked before that just kind of popped into my mind for searches in general is what typically happens after you've kind of done your first search and you've bought the business and you've been running it for a couple of years, and then you start to think about what's coming next. Obviously, it doesn't really make sense to go and raise another search fund and then go and buy another business and kind of go through it all again, because a lot of it is, or a lot of the reason to go through this process in the first place is to kind of learn about how it all works from people that have done it before, from the investors, and have their support, like you said. Have you guys given much thought to sort of what happens next? Do you then go and start investing in these deals yourself as one of those investors? I mean, what's the sort of logical path after your first successful search and potentially exit or whatever happens after that?
Yeah, to be honest, Pat and I haven't put a huge amount of thought up until this point. But now that we're, starting to progress towards the end of our third year, like we are starting to have conversations with the board about, hey, what's our options over the next 2 to 3 years? You get to a natural milestone around that 5-year mark, and I think for Pat and I, there's a range of opportunity, sort of options, whether that's a full exit or a recapitalization or something of that style. And to be honest, Pat and I are open to a range of different options. I think when you've put so much hard work over the last 2 to 3 years, I think what we don't want to do is try and rush to some sort of exit too quickly. So at the moment, Pat and I have got a sort of 5-year plan, and we're keen to go out and execute that. And as options develop, then we'll probably consider those as we go. To answer your question around what comes next, I think beyond building and executing our strategy, and if that takes us to run a little bit longer and something a little bit larger, I think Pat and I are sort of open to that. Then it comes down to what other activities could we get involved in the ETA space. We're definitely interested in mentoring other searchers. We're definitely interested in investing in searches and acquisitions, and in time, potentially serving on boards of operating companies down the track. So they're all things that Pat and I are interested in time to come.
Fantastic. All right, Matt. Well, thank you so much for for coming on today and speaking with me. People that want to message you, I mean, you made mention of mentoring other searchers and whatnot. If they've got any questions, what's the best way for them to reach you?
Yeah, Wattletree Capital. We've got our website, Wattletree Capital Partners. Link up with Pat and I through LinkedIn, and more than happy to have conversations. And for anybody thinking about search, or if you're already in and progressing through the different milestones, then more than happy to go into more detail about our journey so far.
Amazing. Cheers, Matt.